This week we have learned a lot about liabilities, and so now in the exercise 2 and 3, which are together, we are gonna recognize some of these known current liabilities and we're gonna record them too. So the first exercise says that on July 15, Piper Company sold 12,000 of merchandise costing 6,000 for cash. The sales tax rate is 4%. On August 1st, 5% the sales tax collected from the sale to the government. So we're gonna focus on this first exercise, okay? So we're gonna record the entries for July 15 and August 1st transactions. So having in mind that the Piper Company sold 12,000 of merchandise and also the sales it has a tax rate of 4%, we have to add that percentage to the sold total amount. So the cash that we're gonna be recorded in the as a transaction is 12,480 as debit. So we're gonna write here cash, and the amount is 12,480. So in this total amount is gonna be separated in sales taxes payable, which is the 480, and the sales 12,000. So then we have to record the cost of merchandise. And our cost of goods sold were 6,000. In the merchandise inventory, obviously 6,000 too. And to record the sending of sales taxes to the government that happens in August 1st. So we have to write the sales taxes payable as 480 as debit and the cash as credit with the same amount. So in the second exercise here, it says that on November 3rd, the Milwaukee Bucks sold a 6-game pack of advance tickets for 360 cash. On November 20, the Bucks played the first game of 6-game pack. This represented 1/6 of the advance ticket sales. So we're gonna record all these too. So here we have the sale advance tickets. First we have to record the cash, which is 360, and also as a earned ticket revenue 360, because actually so this represents that we have that money that we have received, but actually this money is not a earned money. So also we have to record the revenue earned from the sale of the tickets. That was in November 20 when one of the concert was carried out. So if we make the calculation, we have to divide 360 divided by the 6-game pack, the 6-game event. So we have that every event has a cost of 60. So that's why we're gonna use it to debit 60 and credit the ticket revenue that we have earned during that time, during that month. So if we check my work, I will see that everything is okay. So now to complete this exercise, we go to the number 3, because we have to analyze the financial statement, and also we have to analyze every separate transaction, and check it out to which uh, of these areas they are belonging. No? For example, we talk about the July 15 transactions. So in assets we have the cash because actually it increases the cash, and the complete amount is 12,4080, 12,048, 380, 480. In the liabilities we have that a portion, a, a part of the amount is for the sales tax payable that we have to send to the government, 480. And the equity also because we have revenues, sales that increases, and so it's 12,000. So also we have in July 15 the merchandise inventory that decreases for 6,000, and in the equity the cost of goods sold that decreases to 6,000. August 1st the cash decreased because we need to pay to the bank, to the government, sorry, 480, and so we have a decrease in the sales tax payable too for the same amount. On November 3rd, we have the cash that increased because we earned unearned money, 360, and so we have an unearned tickets revenue for the same amount. And in November, we have an earned ticket revenue for 60, and the ticket revenue as a real revenue increase in $60. Thank you.